Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about why are 2-year mortgage deals currently more expensive than 5-year mortgage deals? Because normally it's the other way round. And interestingly enough, that has changed in the market at the moment. So we're going to discuss why that's happening, what could you do, what should you do, and what are the majority of people doing in the market at the moment. Now, while we're here, make sure you smash that like button over there, guys. That really helps me with the YouTube algorithm. It'll take you 2 seconds to do, so smash that like button over there. And make sure you subscribe to the channel and hit the bell notification. We're nearly at 6,000 subscribers now, which is absolutely insane. And we've got new content every day that I'm sure you'll find really useful. So let's talk about mortgages, because it's top of mind for a lot of you at the moment. Now, if you're fortunate enough that last year you fixed for 5 years, then wow, that's like winning the lottery. I've got a few mortgages like that, but I've got a few that are up for renewal as well, because let's face it, none of us had a crystal ball and we really didn't know what was going to be happening in the market. So why are mortgage rates so different at the moment? Now, historically, and as long as I can remember, I can never recall a time when this was different. A 2-year deal was always cheaper than a 5-year deal. And the reason for that was because the lender had less risk. If you were a problem, it was only 2 years that they were liable for you before you ultimately got passed on to another lender. Also, lenders like transactions because they get fees when you do your mortgage renewal. Your broker likes that kind of stuff as well because they get a fee every time you do a mortgage renewal. So if you get a 40-year deal, not ideal for a broker because they're probably not going to see you again. Maybe you'll be dead or they'll be dead or they'll be retired or both, right? And so it isn't the right kind of deal for those types of people. So people like solicitors, everyone benefits from a 2-year deal. So at the moment, we're seeing 5-year deals that are considerably cheaper. And that's down to something called the mortgage swap rate. So banks sell debt. And so they get a 2-year mortgage out of you, they'll sell that to the market, and they're getting charged more money for a 2-year deal than they are a 5-year deal. Hence, they're passing the cost on to you. Now, the reason for that is the unpredictability in the UK market at the moment. The government haven't dealt with inflation. The Bank of England are raising rates at record speed. We've had 13 consecutive back-to-back interest rate rises in the last year or so, which is absolutely insane. That's hitting people and making people more concerned. And so what they're seeing is the swap rates are saying, well, look, we don't know what's going to happen in the next few months. It's looking like base rate will go to 6%. It's looking like inflation might not come down as quickly as we can. So that deal's a little bit risky for us. And so we're going to charge you more to take that debt off your hands. Whereas 5-year term, we feel this will all be behind us. Interest rates will be a little bit more normal, probably not back down to 0.1%, but they'll be more predictable. The economy will be back on track, and this will all be forgotten because we've all got very short-term memories when it comes to money. So let's look at the 2-year rate you can get at the moment. And so the average 2-year rate is now at 6.23%, which is pretty high. That's going to keep rising as interest rates do as well. Maybe not if we go up a 1%, maybe it won't go up 1%, but it will still go up a little bit. Now on the 5-year fixed, you're able to get a rate of 5.86%, which is a lot less. It's a way better deal. And so they feel that in the short term, as we're saying, that the markets will improve, interest rates will come down, there's less risk, house prices will maybe have a correction, but in 5 years they'll be back where they are. And so they prefer to get you onto a 5-year deal at the moment. They feel that that's just the safer thing. Because if they get you on a 2-year deal, the market crashes 30%, as some are saying it could, then you're going to be in negative equity. There's a risk that when you go to refinance, you don't have the extra money to top it up. Maybe you need to top up the deposit. Maybe you don't pass affordability. It's risky and they don't want that to happen. So that's interesting. Now, what's happening with people like me and you, because we've got two options here. And what are the majority of people doing? Well, it's interesting to know that 58% of people are taking a 2-year deal at the moment. They just feel that within 2 years, interest rates, inflation, all of this stuff will be behind us, and they'll have a better deal than this, the 6.23% here. So 58% of people are taking that kind of deal at the moment. Now, what's happening with the rest of the market? 28% of people are taking a 5-year fix. So around about a quarter of people feel that they just want to reduce their payments, get the certainty, not have the risk of in 2 years interest rates being at 10%, 20%, or even more. I've seen someone said in the comments once that interest rates will get to 30%. They won't, but people just, quarter of the market just want that certainty. They think that there's still going to be volatility in 2 years, and so they feel that that's the best route for them. And that's right. And then the rest, whatever that adds up to, are taking like 5-year plus deals. And so there are market deals out there at the moment where you can get 25 years. There's 40-year deals coming onto the market. I wouldn't be surprised if we have 50-year deals, or deals that pass on to future generations in order to get that affordability to borrow that money and get that property. I just think that that's really ultimately where we're going to end up with longer term products at the moment. So what would you do in your scenario? Well, that's what you've got to look at, really. I can't give you advice on that. I'm not a mortgage broker. So first and foremost, I would go and speak to a mortgage lender. I'd speak to a lender that has the whole market, not just a small panel of lenders. Don't go and speak to NatWest or HSBC. Speak to a broker, because the broker has better options, better availability of deals than you could get by going to your bank or someone like that. So that's one thing that you could do. Now, another thing, you could also speak to the broker, but also look at what your lender is offering you. So if you log into your portal right now, so your mortgage portal, my partner did this on an app that she had. I didn't even know those things existed, but she had a mortgage app. She was able to get a new deal, even though her deal expires in December of 2023. So the government have said that you can now get new deals early. So you can fix the rate today, and that will kick in when your deal expires in 6 months from now, or in less time if that happens as well. So that's a positive thing that you can also do to get that extra security. So I think you should go and look at that as an option. And then when you're on that, consider going interest only for a little while. You can go interest only, no penalties, nothing checked on your credit file. All of this stuff means that you could then reduce your monthly payment, get that as a pot of cash, get that little war chest there that you could use for other things, for investments, or just use it to pay the mortgage down later if you feel that that was the right thing to do. But it gives you that little bit of pot of cash just in case things get that little bit tougher. And that's what I would suggest to more people to do in this current market. Don't flick to interest only and book a holiday, get a new car. It needs to sit there and look at how you can use it for investing only. So that's it from me. Do check out all the other content on my channel, including this video right here.